Good evening, folks. So, just back with another trade breakdown. I'm just going to break down my trade today on pound yen. And just looking at the charts now, I'm back in the replay tool. 2 4-hour candles leading into my session are bearish. So that means I have a bearish bias, right? However, I'm not looking for sells. Reason being, yes, we have a bearish bias, but what makes more sense? It makes more sense for price to go to the upside. Reason being, you know what, I'm not selling into, like, I have a daily zone here, which this candle's rejected. I'm not selling into that. I don't see the point in selling into that. I'm seeing this as just a pullback to continue, and we're pulling back into previous structure. And I'm anticipating candles to the upside. So kind of slightly different today, in where the bias is bearish, which means typically we would be looking for sells. However, just based on where we are in the chart and in the structure, sales would be tough in this situation. If I just go to the 1 hour, we can kind of see there how this daily resistance zone, resistance zone is acting as support. And we look left, we have a previous rejection into here. We look left again, we have previous resistance. So to me, this is just a pullback within the retracement to continue higher. And we can see how the structure's changed in terms of we are creating lower lows, lower highs, lower lows, lower highs. So it does make sense from a session perspective to potentially for sales. However, that's not what I was looking for today. So just kind of things to note. You know, my lesson from yesterday was not to take a trade at 7 o'clock. I took a trade in here at 7, right in here, and I get beat in here. So I wasn't going to make that same mistake today. And if I just skip through, this is 5:30 or 6 o'clock, sorry. This is 6:30 and this is 7. So that is how the hourly close. So if I just go to the 1 hour, just to kind of compare this from yesterday, we have a 1 hour support. We have a 1 hour support at 6. Now the difference between these two is the 7 o'clock 1 hour candle has confirmed the support, whereas when I entered at 7, I didn't have the confirmed support. It's not until this candle, which closes here, 7 to 8 candle, which confirms the support, because we have 2 bullish candles. We can see here we have 2 bullish candles. So taking a buy on this candle is a lot more safer than taking a buy on this candle. So when I seen this happen, I was looking at this on the 30 and I was saying, well, yes, we are above Asian range. You know, it does make sense to continue. Stops are going to be below the range. So you've kind of got a lot more security with this position rather than this position. However, because this was at 7 o'clock and I took a loss yesterday by buying the 7 o'clock candle, I said to myself, I'm not going to do that today. And kind of what we've been seeing lately is like pre-London pullbacks. So because the bearish, or the session is bearish, the bias, sorry, you know, we're going against trend for the session. We don't have any sort of higher supports at the moment on this time frame, and we don't even have that on the 30-minute either. We just have a breakout. But this could just be a deeper retracement to continue lower, because the bias is bearish for the session. So it's counter trend, you know, asking yourself, well, taking a buy on this, is there really enough volume to buy on this candle? Yesterday, there wasn't really enough volume. Volume didn't come until 8 a.m. So that's what I was going to wait for today. Looking at this chart as well, what makes more sense? Buys make more sense, as well as that. Where is the easier buys from? The easier buys would come above this zone here, which is a 4-hour zone, which I have on from here. And the easier buys come above here because looking left, this is cleaner, okay? In terms of when we're in here, we're sort of buying into this, okay? So first test, don't buy at 7 o'clock, okay? I didn't buy at 7 o'clock. What happened is this candle pulled back and then it closed bullish. So looking at this on a 15-minute time frame, there isn't really any structure. The only structure that there is on the 5-minute. I don't trade the 5-minute. So this wasn't something I was looking to get involved in. And I said to myself, well, if this pulls down and closes up here and the next candle opens and we push it up, that's fine. Because in that scenario, I can just wait for a target to be created. If we are up and around this region, price will then confirm the direction for me. Again, we're going against session bias. Also, knowing that we would be above the most recent resistance and also above the most recent 4-hour high, which is bearish at the minute. The next 30-minute candle pulls down, which is our sort of pre-London pullback that we have been seeing before price then continues and closes up here. Now, looking at this on the 1-hour, what I was paying attention to as well, when we broke out, which was here, this is the zone when we broke out with this candle, you could essentially buy, put your stops below here. And essentially, you have this resistance to act as support. You also have this support. You also have this zone. But based on the fact that this trade came at 7 o'clock and I lost at 7 o'clock yesterday, this is sort of key for me for the remainder of this week. We've seen the volume come in at 8 o'clock. So just wait. So this, to me, what I'm looking at here is just a simple break, pull back, and then continuation. So by allowing 7 to half 7 to 8 and 8 o'clock open, I was able to just wait patiently and see price make up its mind first. You know, it pulled down and then it reacted off this zone and we continued. we began to break the resistance. We began to break the hourly high and price has already done its downside, you know, because if volume opened and we were going to continue down, we would have started to break these lows and that could have been a selling opportunity. Because essentially the bias is bearish for the session. We are creating lower highs, lower lows, and we're breaking support and breaking out of this range. So if, you know, momentum came to the downside in line with the bias, we could have taken sells here, put stops somewhere within the Asian range and look to maybe test this support. With volume, you're going to expect to see levels broke. So this sort of resistance, I wouldn't be paying attention to that in terms of reaction. Well, I would, however, I would be confident to see some form of downside. And, you know, look at the size of this candle. If we had that on the opposite side, we can see that this area would have easily been tested. But what made more sense? Buys made more sense. So the fact that we have broken out, this is essentially an early indication of change in rotation back to the upside. So what we need to see is we need to see this support respected. Price pulls down. We continue. So if I just bring on my trade from today, this is my trade. So this is sort of the levels I had marked up. Looking at this on the 30-minute, Asian high, Asian low, we have a breakout, pullback, continuation. Looking at this on the 15-minute, we can kind of see here how we had a higher support. So when I mentioned, you know, looking at this candle, there wasn't any sort of structure, only on the 5-minute. But when we pull back, pre-London pullback, and this 15-minute then pushes down, this is London open. So we wick down, volume then comes in, we push to the upside, that forms a higher support, and then price starts to break up. So to me, I executed then. And one thing I done, which I actually failed to do yesterday, which resulted in my loss was where I placed my stop. So my stop placement, if I just bring on my trade from yesterday, my stop loss was below the support, right? Now this support is just one candle. So if I actually would have had my support below the previous 4-hour low, which would be here, say, what have I done? I have allowed myself to potentially remain in the trade by giving myself an opportunity to cut my trade. And what I mean by that is, what my idea was today was, well, when I enter here, and because we've already pushed down and we're pushing to the upside, I expect to see continuation. But for whatever reason, if price fails at the resistance or the zone and we start to come back down, if we start to break back below here, I was going to cut my trade. So I was going to close my trade. And that would have meant that I would have only lost like 0.5% compared to a full percent. So in putting my stop loss where I did yesterday, which was somewhere in and around here, I didn't allow or didn't give myself an opportunity to manage the position based on structure. Okay, because what I could have done is, like, if we started to break down here, cut the trade, right, which means I would have lost less than I set it to lose, but also it's below the previous 4-hour low, and the fact that the support at the time wasn't really a confirmed support. You know, the difference between today, we have had 2 1-hour closes which confirm a support, and one we have a breakout candle. Yesterday we just have a higher support, and even on the 30-minute time frame we only have one candle. You know, we need to the second candle after the support, usually the candle which will confirm the support, that needs to ask the question of the previous, can we respect this low? If we can, and we can confirm the support, then happy days. But in this situation it didn't. So the sort of trades compared, you know, this trade today compared to yesterday's trade, there is some similarities, and the lessons I took from yesterday's trade, in that I entered at 7, I didn't enter at 7 today. My stop placement today made a lot more sense than yesterday. I give myself enough room to manage my position, give my trade enough room, you know, for it to breathe and excuse me, continue in the direction that made sense without, you know, choking the trade. And it was a lot more comfortable today to do that. So, and it was one thing Amber brought up yesterday in our sim session that we had, that, you know, although yesterday when I mentioned in my video how could I have managed this trade, and I said to myself I could have managed this trade by closing when we broke in here, that is correct. However, what would have made more sense is just to give myself a deeper stop, because if we're looking at this trade from a, you know, higher time frame, say for example on the 4-hour, you know, when we break this level, we're anticipating price to continue to at least this resistance, and higher time frame look to continue and push. And if we look at the size of this candle, we're typically getting really large candles, but you know, the 6 a.m. candle, London Open, is typically a large candle. So if I had my stops here and I was, you know, say looking at this from a 4-hour perspective, give myself a nice stop loss below the 4-hour support, you know, I could have targeted here, could have extended, and again, I'm still giving myself an option to get into a trade and still capitalize on a decent return, you know. So the exact same happened today. You know, look at this push we had, look at this push we had. In terms of managing the trade today, what I done was I allowed price to continue, and as soon as it kind of continued beyond 0.5%, I just locked in. I moved my stop loss to 0.5 and secured 0.5%. Where I was targeting prior, like what I was thinking of was retesting the 4-hour resistance, which was here, which kind of aligns nicely with the sort of the edge of this 4-hour support zone that I have, which just stems from here, and this sort of resistance has sort of reacted at the bottom of that zone, which aligns with this resistance. So I think this is a good potential target area. Of course, there is a 4-hour support max target based on the weekly outlook that my mentor done, so that is also a possibility. But the fact that I lost yesterday, entering a trade today, I'm not going to sit and hold and expect to get up here in one day. I'm just going to continue to manage how I manage, and just go about it that way. So I did, let me just pull this back. Yep, move my stops to there. Next candle sort of pulled back and tapped me out, and if I just kind of fast forward, this is sort of what's happened, and this is where we are. So I think I managed it correctly. Of course, if I didn't have any sort of management, I would have come out of this trade for like 1.2% or whatnot. However, it wouldn't have been pretty, in a sense that I would have had to have sit through 40 pips drawdown. Prices pushed up. I've been able to secure 22, 23 pips. Price pushed up to 40 plus, and then came all the way back down. So because again, the session bias is bearish and so on, like, you don't really want to be holding trades for that long, I don't think, against that bias, because price could have, as much as we came down and tapped here, what's to say price could have just come all the way down here. But it does make sense for price to come there, because this is the most recent support and resistance. This is the breakout. This is the retracement back to previous structure before we continue. So it makes complete sense. But I was able to secure 0.5% today. Took a loss yesterday. And yeah, so I think at the moment, if I just have a look at my sort of journal for this month so far, I am sitting at 8 trades taken, plus today's trade, so that would be 9. And at the moment, I am sitting at 2.94% for the month. So not too bad. Not the best months. However, slowly just sort of recouping the loss from yesterday, and just cracking on with how I continue to do things on the chart. But that's the trade. Quite a lot of similarities between yesterday and today. Taking my lessons that I learned from yesterday, applied those to today, and was able to get into a trade with really no drawdown, which is great compared to yesterday. But yeah, so I'll get this uploaded. I'll get a post in Slack as well, guys, so appreciate you taking the time to view. But that's my sort of trade breakdown from today, sort of using yesterday's trade alongside today's to sort of compare. And yeah,